Despite being introduced less than 3 years ago, YieldMax has already established an impressive portfolio of high-income ETFs. With their first fund, Tesla, being launched in December of 2022, today they currently list 49 ETFs on their website, and at one point were even introducing a new ETF every single week. Originally just offering single stock synthetic covered call funds, today they now offer exposure to a variety of indexes, Bitcoin, gold, as well as offer target income funds. These synthetic CC funds have become extremely notorious for their very high dividend yields. Just looking at some examples, Tesla currently yields 106.47% according to their website. NVDY yields 137.13%, and PLTY, their Palantir option fund, yields 140.58%. But out of all the YieldMax funds that exist, there's one in particular that's exploded in popularity and has formed its own cult following. That fund would be MSTY, ticker MSTY, which is their MSTR option income strategy ETF. If you go online to various websites like Reddit, there's entire communities of people who not only like this fund, but are entrusting their life savings to it so they can retire early with that reported 143.11% dividend yield. Some people are even borrowing money so they can put it all into MSTY. The YieldMax subreddit is full of these kinds of people saying that they're dumping large sums of money into this ETF so they can collect high monthly income and retire early. To get there even faster, some investors are even using margin in their accounts to buy MSTY. And if we do the math, we can see it is extremely tempting if you like high-yielding investments. MSTY currently trades for $21.84 per share, and their last monthly dividend was for $2.37. If you had invested only $25,000 into MSTY, you would have received a monthly dividend last month of $2,711.28. That's an intense amount of income off such a low investment. Nothing else out there, whether it's a REIT, a BDC, or a closed-end fund, can even come close to offering that much money. So obviously, that's extremely tempting to anyone who might be a member of the FIRE movement or just likes high passive income. But as it's always said, all investing is subject to risk. So what are the risks associated with holding this particular fund or any of the YieldMax investments? Can you really retire off MSTY's distributions? There's a few things that we need to take a look at and consider. The MSTY ETF by YieldMax uses a synthetic covered call strategy on MicroStrategy stock, which is ticker MSTR. This is different than a traditional covered call strategy with funds like QYLD and SPYI. In a synthetic covered call strategy, the investor, aka the ETF managers, do not own the underlying security. Rather, the ETF seeks to synthetically replicate 100% of the price movements of the underlying security through the use of different investment instruments. So MSTY doesn't actually own shares of MicroStrategy, but it attempts to replicate its share price movements using options. How successful the managers are at replicating upside of MicroStrategy can vary significantly. You can read more about it right here in this fund's prospectus. But all covered call funds, whether they're synthetic or not, have limited upside and share price gains. What this means is, when the underlying security rises in share price, in this case MicroStrategy, then the covered call fund, MSTY, will not grow in share price nearly as much. And in fact, from what we've seen with these synthetic funds is that they struggle significantly more when it comes to growing in share price. If we compare MicroStrategy stock with the YieldMax fund, we can see that as of the making of this video, MicroStrategy is up 139% from this time a year ago, whereas MSTY is down 34.5% from a share price perspective. So we can see how severe the share price underperformance has been with this ETF. It experiences all of Micro's downsides and only experiences around a quarter to half of the upside, but that can vary greatly depending on how well it's being managed. We also need to dedicate time to looking at MicroStrategy themselves, since that's the underlying security. How well MSTY does completely depends on the performance of MicroStrategy stock. This company has become really well known, not necessarily for what they do. They're a software company that provides enterprise business intelligence services, but their founder, Michael Saylor, is famous for being a Bitcoin fanatic. MicroStrategy themselves own a lot of Bitcoin, which has continued to climb in value and is now well over $100,000 per coin. A significant number of people who buy MicroStrategy stock buy it because they're bullish on Bitcoin. It really is bizarre for a company to hold on their balance sheet a cryptocurrency that's gained so much in value that it actually overshadows the earnings they make from their regular business. But we can see this play out on a chart. If we compare MSTR with Bitcoin's performance over the last year, you can see a lot of similarities in how they move. When Bitcoin rises, micro stock rises. When it falls, then micro usually falls as well. The main point here is the success of MSTY, MSTY, relies on MicroStrategy, which relies heavily on Bitcoin's performance. Micro is a legitimate business, so it's not all about the Bitcoin, but a lot of it does factor into their company's performance. So if you're planning on retiring on MSTY alone, you have to be bullish on Bitcoin performing well for the rest of your life, or for this company to successfully manage itself to continue to perform well if something should cause Bitcoin to fall. So what would happen to MSTY if MicroStrategy were to fall, whether due to poor earnings, a fall in Bitcoin value, or just along with the rest of the stock market if a bear market occurs? What would happen to the share price and dividends if one of these events occurred? We don't have to wait and see what would happen in a worst-case scenario. YieldMax has other ETFs that you don't hear about that follow the exact same strategy as MSTY, but their underlying stock has taken a tumble. You've likely never heard of MRNY, which is YieldMax's fund that's used on Moderna stock. This ETF uses the exact same strategy as MSTY, the only difference being that it's on Moderna and not MicroStrategy. Since being launched back on October 23rd of 2023, Moderna stock has fallen by 65%, but MRNY is down 87.78% in share price. Google wasn't showing the correct information, which is why I had to switch to Yahoo Finance here. If we look at MRNY's dividend history, we can see an absolute bloodbath. In this fund's second month, it paid a $2.65 dividend, whereas last month its dividend had been decimated to just 12 cents. MRNY and MSTY are completely identical. They both employ the exact same synthetic covered call strategy. The only difference is that MicroStrategy has been booming right now thanks to Bitcoin soaring. What we're looking at with MRNY could happen to MSTY if things take a negative turn. You should never put all of your life savings into a single holding. MSTY is again only exposed to a single company. Everyone recommends spreading your investments across multiple holdings, asset classes, and sectors. Most people know this, which has led some people to pursue a different strategy. Many investors will instead rotate between YieldMax funds. They'll say, I'll put my money into MSTY, and then when it starts falling, I'll put it into a different YieldMax fund that's performing much better. First off, this is trying to time the market, which is something that no one has ever consistently done every single time. If you try this, you're going to exit too early or enter too late. Second, do you really want to constantly monitor your investments if you're retired? Constantly worrying, monitoring, and rotating your portfolio holdings doesn't sound like a retirement that I personally would want to experience. But what about holding a group of YieldMax funds? What if you hold 10 or 20 of them for diversification? Well, there's an ETF that holds a group of these YieldMax funds, which is YMax. This ETF currently holds 29 of their ETFs, which would more than take care of the whole diversification issue. It's been around for a year and a half at this point, and it's lost almost a third of its value so far. This was also during a time when the whole stock market was soaring. Comparing it to the S&P 500, it's up over 13%, while YMax is down 32%, again just from a share price perspective. But the good news is that the dividends have been more stable. This fund started paying weekly dividends about 9 months ago, which is why this big gap here exists. You'll notice the dividends can swing pretty significantly from one payment to another. In less than a year, its dividends have been anywhere from 31 cents per share to 10 cents per share. Every YieldMax fund is like this, and it's going to make budgeting your expenses harder since the payments vary so much. So all things considered, can you really retire early off MSTY? Technically, yes you can, but the biggest concern I would have is, can you stay retired? All it'll take is a good enough bear market for this ETF to suffer significantly. I disagree with the idea that you can rotate these funds out because that's trying to time the market and that's not a relaxing retirement. Diversifying into many of these funds is a better move, but they've all lost share price value over time. But what I think is the most important thing to consider in this video about whether you should attempt to retire off any YieldMax fund comes from the CEO of YieldMax itself, Jay Pestrichelli. Did you know that the CEO of YieldMax once said that nobody should invest in these funds if you have less than $1 million? It's true. On September 16th, 2024, Jay said during a live interview that people should only buy index funds if they have less than $1 million. Let's take a look.
Like, It's like this little secret of our industry here, guys. And I'm sorry, I'm going to rant for 2 seconds. Those new investors out there, like when people ask what should I do if they came across $10,000, my answer is buy the S&P, buy the Qs. Like not until you get, large, six figures do you need to have like professional management. You could do it, you know, anything under $1 million, buy the Qs, buy the SPY. Generally those go up, and it's like, and it costs you almost nothing. Like I love yield max, don't get me wrong, and I love the distribution characteristics of it. But if someone just came to me and said, "What should I do with money?" I tell them, but it's depending on their age, either buy the Qs or buy the S&P. So when I say I like to buy calls on the index of the markets, that's why. Just generally markets go up, and I want to have a piece of that.
And those are all the things that need to be addressed with MSTY and YieldMax. It's ultimately your decision, but with that being said, thank you all so much for watching. If you'd like to connect and also see what's inside my own personal dividend portfolio, then feel free to check me out over on our Patreon, where you'll receive updates and be able to talk to me and other higher yielding dividend and income investors. But with that being said, thank you all so much for watching today's video, and until next time, take care.